Markus Thielen, the CEO of 10X Research, a digital asset investment research firm, joins me now. Markus, great to have you on the show. We currently see Bitcoin hovering just below 100,000 after breaking it through that record high milestone. How were you able to predict that this would happen in the 48-hour window that it did?
Yeah, thanks for having me. Of course, we looked a lot of the liquidity that was flowing into the market, the futures positioning. So it was just almost like a volleyball that was being held, underwater, and it was just a matter of time. And I think we saw this pop. And of course, there is a massive over leverage, on the short term, where basically perpetual futures open interest increased by like 50% just within basically the last week. A little consolidation now because of the high funding rates, but I think we're going to move higher from here.
Interesting. How high do you think Bitcoin can climb?
Well, I think for next year, we were targeting minimum 150K, if not above 200. And we do a lot of cycle analysis, and this is why we predicted actually that we could be at 125,000 this December. We predicted this last July based on this cycle analysis. And if the cycle just evolve based on the analysis, we should be at a minimum 150,000 next year. So another 50% really minimum upside next year.
Interesting. Any sort of volatility that could happen between here and 150,000?
Well, of course, anything can happen. But of course, we're seeing more and more institutions looking at Bitcoin. A lot of our subscribers are institutions, are hedge funds. We are also in discussions with some sovereign wealth funds, so the demand or the interest is real there. A lot can happen. What we usually see, between October to March is usually a very strong period. Then there's some consolidation. But we do think that the market is going to grind higher. And based on our analysis is that we might actually have left the Bitcoin cycle theory by next year. So meaning we're not going to have these sharp 80% plus drawdowns, because now it's really an institutional asset class. So there's a lot less downside volatility and more upside volatility.
Interesting. How much will the SEC chair pick by President-elect Donald Trump, that's Paul Atkins, move the needle when it comes to crypto?
Well, that's of course very huge. We have, of course, an SEC chair right now who has been probably a little bit more timid in terms of regulation, in terms of pushing out what can be done and what cannot be done. And I think we're seeing really this new administration acting almost already. I think it's going to probably take until February, March, April until he's confirmed. So it's going to take a little bit of time. But nevertheless, I think the positive momentum is already moving. When you just consider since the US election, the market cap of crypto has increased by 1.4 trillion. I mean, this is really like a massive amount of money, that wealth that really has been really created. And I think there is no slowdown now from people kind of, building, the DeFi renaissance is really probably coming. And I think we're seeing this already, that there's a lot more inflows in the Ethereum ETF. So I think this is the next asset class in the crypto space that institutions are targeting. And we're seeing this the last couple of days in the flows there.
Interesting. I do want to talk more about that. So much focus obviously is on Bitcoin. It is the most well-known token within the cryptocurrency space, but it is a wide and complex space as well. You mentioned DeFi earlier. What else should we be watching when it comes to storylines in the entire sector?
Well, of course, there's, a huge part of speculation. There's a huge part of, DeFi. DeFi, this is what we had kind of like 4 years ago, really, when there were zero interest rates. And of course, crypto has higher interest rates. Therefore, crypto became a lot more attractive from the kind of yield perspective. But when you just think about where the staking yield for Ethereum, which is sort of like the interest yield for the crypto market, and that's around 3.2%. So it's nearly where the 10-year treasury yield is. So for anybody who buys suddenly Ethereum, can just get the funding yield or the staking yield. That's probably going to be included next year in some of these Ethereum ETFs. So that's going to make it very attractive for institutions. They want to get some dividend yield. They want to get some yield income. And if that's going to be included under a new SEC chair, that's going to be very bullish for Ethereum, because suddenly you're opening the taps really. And I think for a lot of the salespeople that were really pushing for the Bitcoin ETF, they're going to need a new story for next year. The new story might really be Ethereum.
Interesting. Very quickly, Markus, what's the best way to go about adding crypto to your portfolio if that is of interest to you?
Well, I mean, it's very simple, to have some part in Bitcoin, some part in Ethereum, and then you already cover a lot. I think it will take probably a little bit longer until we see other ETFs, but that's probably the two asset classes. There are, of course, some second order effects that are, benefiting from decentralized exchanges, from trading there. I think there is a lot of stuff happening. As I said, the crypto market cap has increased by 1.4 trillion and is now at 3.6 trillion. So there's a lot of wealth has been created, and
Markus.
this wealth will be used to build more projects.
All right, Markus Thielen, CEO of 10X Research. Markus, thank you so much for joining us on the show, and I have no doubt we'll be continuing to cover crypto in the future.